These are the physics-based sentiment forecasts for the U.S. stock market using data as of February 28, 2025. Our report has 3 figures, and this video focuses on figures 1 and 3. See the videos and web pages linked on each page of the report for background information on the figures and about our research. Our 3-week forecasts call for long-term physics-based sentiment to be moderately optimistic, which is one step below the most optimistic level. Short-term physics-based sentiment to be shifting toward pessimism. There are no flashes of sentiment within this forecast horizon. Our forecast for U.S. stock market price momentum, as measured by the 14-week RSI, is for it to be trending lower in March. Implied economics-based sentiment registers as meaningfully negative, which indicates that investors have a negative view of economic and market conditions. Thus, 3 conditions contribute to the stock market's vulnerability in early March. First, the short-term driver will have a pessimistic stance, as described in Figure 1. Second, implied economic-based sentiment continues to be negative, meaning that investors hold a negative view of economic and market factors. This condition represents an economic need for a stock market price decline, and is described in Figure 3. The least important condition is that the recent market trends measured by the MRI indicate the market has ample latitude to move lower from current levels, as shown in Figure 1. The lower panel of Figure 1 shows the physics-based sentiment drivers, indicating the naturally occurring shifts in investor sentiment over the last 52 weeks and the next 3 weeks. Physics-based drivers explain a meaningful portion of stock market volatility, and we can create reliable forecasts for them several months in advance. The upper panel displays the price of an ETF tracking the S&P 500 Equal Weight Index, shown as a dark blue line, along with our Market Resilience Indexes, or MRI. The MRI are based on return acceleration and show the herding behavior of investors as they respond to physics-induced sentiment shifts and all other economic and market factors. They highlight major and minor market inflection points. The short-term driver shown in Figure 1 indicates naturally occurring pessimism in early March. If a price decline is indeed needed for economic reasons, we are coming to a multi-week period in which declines are likely to take place. Recent stock market return acceleration measures, the macro and micro market resilience indexes shown in Figure 1, do not yet indicate strong negative trends. Despite their positive recent slopes, both have trended horizontally in recent weeks, which is highlighted by the yellow box in Figure 1. The macro MRI is at a relatively high level of 68, and the micro MRI is at a moderate level of 42 on a scale of 0 to 100. Both can move meaningfully lower from these levels and still be within their normal ranges. The condition of the short-term driver and the MRI underscore the need for caution over the next 2 to 3 weeks. An important mitigating condition is that long-term sentiment remains moderately optimistic, a sentiment level that historically has had few losses greater than 30%. An absence of bad economic news over the next 2 to 3 weeks may enable the market to move through this period with minor losses. In Figure 3, the upper portion of the figure shows market price as a dark blue line and the predicted price momentum as the solid red line. The solid red line shows the predicted price momentum moving lower over the forecast horizon. Figure 3 also shows the smoothed excess RSI as the light green line representing the implied economics-based sentiment. This is an important indicator of investor sentiment regarding factors other than physics-induced optimism and pessimism. The factors can include economic, valuation, political, and other considerations. A meaningfully negative reading highlights the potential for future market declines even when the market moves higher. A meaningfully positive reading can mitigate future losses. Implied economics-based sentiment is currently below the neutral level, shown as the dashed green line, indicating meaningfully negative sentiment related to economic and market factors. This condition began at the end of January 2025 and is likely to continue over the next few weeks, even if the stock market moves higher. Should this condition continue, it will amplify price declines when they do occur. Contact me with any questions. Thank you for watching.